The game board is changing. Here's what shifting liquidity means for Bitcoin price. Hey guys, it's Keith Allen. Hope you had a great weekend. Hope you enjoyed the Easter holiday for those who celebrate, and hope that you have been navigating this market very, very well. We have finally some changes, some long-awaited changes in liquidity in the order book, and that is making way for some really interesting price action here, and a bit of a divergence from what's happening with TradFi. So in this analysis, we're going to take a deep dive into the order book and show you what order flow and order book dynamics look like, especially what this shifting liquidity can indicate for us. We're going to compare that next to what's happening in the on the candle chart. We had a strong weekly close, a stronger daily open, and so we'll look at kind of where the technicals line up relative to where the liquidity based resistance and support are in the order book as well. As per usual, live chat is open. If you want to join me, would love to have you. Always enjoy engaging with you guys. So if you're watching on YouTube, you can engage on the live chat. If you are watching on X, I don't know if the live chat works there, but you can leave a comment, and I will always go back and engage with those comments there as well. If you haven't done so yet, do me a favor and smash some buttons for me. All right, hit that like, hit that subscribe, especially make sure you hit that subscribe button. That's a little bell up there on the top right, so you don't miss any of the future streams. And with that, we're going to climb right in, and I want to start today on fire charts so you can see at a glance how quickly and how easy it is to see these changing liquidity dynamics, right? So let's start here on fire charts. I've got the weekly chart open, and the first thing you're going to notice here is we have a large block of bid liquidity, about almost 52 million has moved up to the 83.5K level, and we have broken this 88K level, which for those who are new may not realize this is part of what Spoofy the Whale has been up to. So let's zoom out and give you a little bit different perspective here. Spoofy the Whale, you can see double stacking ask liquidity. This has been going on since back in March, and actually I could zoom out further and you'd see it happened even for a longer time, since the beginning of March. And so we've seen all of this movement of ask liquidity and prices. I'm going to push the contrast here and make it a little easier to see. We can see all this movement of ask liquidity that the price has really followed that, and he's been suppressing price for a long time. We finally have a little bit of a change here, and so we can see that bids have moved higher, asks are starting to shift up a little bit. And whether or not this develops into a real breakout move or a fake out remains to be seen. But I'm going to identify the key areas that we really need to be watching, so we can get a sense of how this is going to develop from here. Like I said, the first thing we noticed here, this big block of liquidity. I said it was 52 million a second ago. In a different resolution here on the monthly chart, that is it's binned a little bit differently, so that's why it looks like more. It's 61 million here in this time frame. Nonetheless, this is an indication, if it will hold, I would add, that price is going to push up. We've seen, if we zoom in, we can see some of the interworkings of what's going on here, right? So we had a big block of bids move higher. We have incremental bid liquidity stair-stepping higher as well, and we have asks also moving up a bit. Now, some of this was taken, as you can see, and some of this, before it was taken, was laddered up even higher into this, all the way up to this 92K level, which is where the lion's share of Spoofy's ask liquidity is. Now, there have been times over the past month or so where it looked like Spoofy was buying, and you could scroll back through the history of my streams and see on YouTube or X where that happened. And there are plenty of examples of where that was happening. So I did expect to see price moving up, and even maybe see Spoofy doing some selling at higher levels. We've seen just a very, very minute bit of that a couple of weeks ago. Now I'm wondering how this game is going to be played, right? So here's where this liquidity game lines up with the technical analysis game. These levels are not random by any stretch of the imagination. In fact, this 88K level is well aligned with key moving averages. And we also, of course, have a quarterly open that we have been quarterly and annual open that we have been discussing here recently. So let's look at first on the candle chart. We can see we did break through this trend line, which is the macro trend line that we have lost, a while ago. It was back in the end of March, really around that monthly close in March, where we lost this, tried to reclaim it, lost it again, lost the 21-day moving average, finally reclaimed that, and then came back, took the 50. As you can see, we retested support here on this 50-day moving average 1, 2, 3, 4 times, and now after yesterday's close and open, we've got a pretty solid start here. You can see a long signal from trend precognition on the daily time frame from the A2 plus algo from trend precognition, and down here the A1 algo from trend precognition also showing a long signal. So confluence between these two signals obviously is a good thing to see, and we can see that this has indeed played out. Now this does not necessarily mean that we're going to shoot through all of this resistance. What these signals actually mean is that price isn't likely to go back down below this level here in this time frame. In other words, the 50-day moving average should hold for the next 24 hours. Obviously, we want to see more. So we look to a weekly time frame, and we can see that on the weekly, we don't have any new signals here. And we're a bit flat here on the A1 slope line. So it's less decisive on the weekly than it is on the daily. So we're just going to watch these key levels here, right? So we had a level up here that we were trading for quite some time. Should probably extend this out now. This was, let me take it to the daily so I can get a little bit more accurate with my geometry here. So this was the range. I'm going to take out trend precognition so we can get rid of some of the noise on the chart. But nonetheless, this is a strong signal here that we're looking at. And as you can see, this came off of a double bottom. So there's a lot of reasons to like this move right here. What gets a little bit concerning is the fact that we have these key moving averages and we're seeing a rejection here for the moment on this 200-day moving average. Okay. So this move could be all for naught. If Bitcoin price cannot hold above that 200-day moving average, then obviously we expect to go back down and retest. And that could really develop this into a nasty trap, right? So we've got to watch out for that. On the weekly time frames, let's see if this lines up with any of the technicals any better. So what's up here, right? We have this level I just showed you was a prior consolidation range. That was around 91.6. We have just above that, we have the 21-week moving average, which is around 92.3. And just above that, ever so slightly above that, we have the all-critical 2025 open. This is the level to watch. This is the level. This is the gate to resuming the trajectory and getting back to all-time high territory. Okay, so this is what needs to happen. Bitcoin needs to work its way and maintain its way above this trend line, and it needs to RS flip this 200-day moving average. Whatever time frame you're looking at, there's key moving averages in the way, right, in terms of technical resistance. But this is the level that really matters most, in my opinion, and that is this 2025 open, which is currently around 93.3-ish. So does it look any different on the weekly? Not so much. I mean, you've got the 21-week moving average. That's a bit more important to me. But you can see how price has responded on retest or attempted retest of support at that 50-week moving average. And of course, we saw it here on the 50-day that we're trying to break that. So whether or not we hold here, this is the critical move that needs to happen. We need to see more bid liquidity coming in here to at least, at the very least, hold support above these levels. Let's hold above the trend line. Then we can go level by level. we've already wicked the fact that we've already wicked above the 200-day moving average means that it cleared out a lot of the liquidity that was in the way. And so if we look at that back here on the order book again, we can see, in fact, let's zoom in and see if how the order flow is lining up. Okay, so obviously this is not going through like a hot knife through butter, right? This is resistance is still here, albeit greatly diminished. Did I just say muchly? Yeah, okay. Greatly diminished. And most importantly, we can see that whales are still buying. Now, the purple has just rolled off a bit, but I would not blame anybody for any profit taking at these levels. Okay, we've hung down here so long that the market's a bit gun shy. And if you look at what's happening with TradFi right now, it's understandable, right? Look at this. Look at the blood on the S&P. Look at the blood on the Dow Jones and the NASDAQ. Everything in the red right now. Largely because of this escalating trade war, right? The market is not liking what the current administration is doing, either economically, geopolitically, and quite frankly, I think some people are getting pissed off about the issue with deportations and rule of law, kind of ignoring the Supreme Court, that kind of thing. That's kind of frowned upon here in the U.S. So these things are going to take time to play out, most definitely. But at the moment, we can see that Bitcoin price is. I'm not going to say this is a decoupling yet, but it is certainly a because one day does not make a trend, but it's certainly a divergence from what's happening here with TradFi, which is a positive thing for Bitcoiners for sure. And I think this has a lot to do with the weakening dollar, alongside of all the other economic things that are happening relative to tariffs. Now back to fire charts again, we can see that price is at least for the moment holding here. We do have some the order flow is what's important to watch here, because even if we get rejected here, if we still see buying happening, then chances are we're going to grind through. Now, what would give me more confidence in what we're seeing is to see these bids, right? So this right here, this block that moved up here, this 52 million, it is kind of hiding behind a $10 million block at 84, right? It's as if they really don't want to get filled. If they did want to get filled, then they would be leapfrogging or front running this 84K block, or even up here at this 85K block, which is only 8 million. So watching what's happening here within this range, this could also prove to be a spoof, right? We've seen these games played over and over again for months and months and months. So be mindful of how liquidity is moving. I would say as we approach these resistance levels that we're at, that's not the time to ape in. If you didn't already take a position, buying the top is not typically a good idea, at least the local top. Now, that goes for trading. If you're a long-term investor and you have conviction that price will once again reclaim these levels and go back to all-time high territory and eventually break the all-time high, then, well, hey, there's lots of upside here. But just know that the downside risk is still here. If we were to build this in a classic risk to reward model, you would see we obviously have resistance right here at the 200-day moving average. So that's not a safe zone for anybody, right? We're not in a good buy position for anybody here. We then would have, if we do break this, we would then have, a mere 3% to the 20-day, the 100-day moving average. And then where the strongest resistance is going to be, you're only at 6% to that open, right? To that yearly open. So not a great risk to reward setup, in my opinion, from where we sit right now, right? Because chances are, if we get rejected here, then we could flush back below, at the very least retest the 50, potentially retest the 21. And if you lose it, then obviously this is the next target down here. So this doesn't look great to me. I would be, if I wasn't already in a position, I would be looking to buy the support tests, and I would be looking to potentially buy a breakout if we do reclaim this 2025 open. And I want to show you just real quickly what that looks like on another chart here with our timescape indicator, which shows where the quarterly and annual opens are. And so, we have support down here near this 21-day moving average, based on what's that? The April 1st. That's the Q2 open of this year. And so we have the level that I just shared with you, that 93.3 level right here, right? That's annual open. So this to me is going to be the most significant RS flip we get. These are baby steps, and obviously they all have to happen, but we got to flip this one right here to have a shot at getting back to that all-time high territory. So that's what I'm watching. I hope that gives you some insight and gives you some things to watch. In the meantime, I would say stay in tune to what's happening in the order book, right? Let's stay in tune to whether or not we see more movement in this liquidity. Do we see this step up? Do we see this leapfrog and try to front run 84? Or is this just here as a backstop to kind of fuel some momentum here? So that's what I'm watching. Let's see what you guys come up with. Again, thanks for the support. If you have left a comment on X, I will do my best to engage with those very, very shortly here today. All right, guys. Thanks again for following along. We'll talk to you soon. Hello.